Hey Trey, how's it going? Ryan with TrendLizard.com. I hope you're doing well. I got your email. We're going to take a look at two stocks and one ETF for you. Palantir, PLTR, Nvidia, NVDA, and then PDBC, which is the Invesco Commodities ETF. We'll take a look at them in that order. All three we've looked at before, so this is just an update per your request. We'll start with Palantir here. Incepted in late 2020. Gave us some trendy upside movement. Ultimately, it gave us a three-wave move to the upside. But, we don't know where it was in its larger Elliott Wave progression. Just because the stock was incepted back here at the start of October doesn't mean this was the start of its Elliott Wave pattern. Could have been something larger. Whatever the case may be, once it recorded a high in early 2021, it's been on the give since then. Going all the way back down below its inception point to set a new all-time low in May of 2022. This overall decline off the 2021 high is currently a very large three-wave move. So maybe this is just a correction of some much larger pattern. It is yet to be determined, but obviously it's been heading down, and at the current time, it is a three-wave move. So let's go ahead and dive into more of the details here. Off that high in 2021, this shows you what that three-wave move would look like. You have a five-wave move to the downside into May's low, this B-wave clear three-wave recovery, and then off of this high here in September 2021, we have this 1, 2, extended third wave, fourth, and then what could be a fifth wave down. It's not hard to see how this down leg here off of that September 2021 high could be a completed five-wave move. Now, trading at $9.27, obviously a move up to 2050 would be a massive move. It would basically have to double its stock price to get there. Despite that, that is the most important level on this chart. If it's ever able to do that, this big decline is left as a three-wave move, and that is a very bullish event. Obviously, it will take time for that to happen, but that's the major line in the sand, so keep that in mind. So let's go ahead and zoom in just in on this down leg here. This takes a closer look at the details of that five-wave decline and the potential that it could be over at May's low. Since then, it has kind of a choppy, uncommitted recovery off of the low, but the reason we're zoomed in and looking at this time frame is because a move above 1175, a little bit closer level, would be the first real solid clue that this massive five-wave decline is over, and that at the very least, this big five-wave decline is being corrected by a larger counter trend recovery. So that would be a bullish event as well on a shorter time frame, 11.75. Obviously, it hasn't gotten there yet, but that's the line in the sand to keep an eye out for. And so in that instance, one of two things: either the larger three-wave decline completed, or you're just getting a larger counter trend recovery. Even if it was just a larger counter trend recovery, that would point price up to this yellow support area. So either way, it would be a bullish event, even if the larger pattern was bearish. But again, that potential would be there that a major low would be in. So a move above 1175 would be a bullish thing. So let's go ahead and zoom in and just look at this action off of May's low here. This is my effort to try to call this a trendy move. It's not the easiest thing to do. It's been a pretty choppy affair so far. Basically off of the ultimate low here in May, would be a 1, 2, 3, 4, 5 for wave 1. And then this choppy down move that basically retraced about 61.8% of this up leg as wave 2. And then starting wave 3. Now here's the point of this exercise here, trying to label this move, is it helps us come up with key price levels that Palantir needs to stay above to remain bullish. And in this case, it's 8.25. If it was to move below this level, suddenly it becomes really hard to call this recovery a trendy move in progress. It would suddenly look a lot more just like a counter trend ABC move. If that happens, it becomes very difficult to be bullish on Palantir on any larger time frame, because suddenly this is a counter trend move. That has to mean it still points down. So those are the levels we're looking at, 825. Keep that in mind if you own it. A move above, step back here, 1175 would be a good buy point if you don't already own it. And go from there. So it needs to stay above 825 to stay bullish. So there is that guy. Let's move on now to Nvidia, NVDA. We looked at this again before, and I think our analysis was pretty spot on at that time. From the beginning, it was incepted in 1999. Lots of back and forth action, just one large ABC counter trend pullback. And then off of that 2008 low, it really kicked it into gear and gave us this massive five-wave advance to the upside that may be complete. So you can see pretty clean as day, 1, 2, 3, 4, 5 on a very large time frame with the potential that it's over. Now, one way we can determine or at least increase the likelihood that a high is in is if this fifth wave advance becomes retraced by more than 61.8% in any notable way. This yellow area here represents that Fibonacci area or support area, with the bottom level of that yellow area representing a 61.8% retracement of this up leg. You can see that we have retraced about 61.8% of this up leg here. So if it continues lower from here in any notable way, suddenly we're going to have to say with pretty, fairly high confidence that this entire 13-year move, or however long 12 to 13-year move, is over and is undergoing correction. Now, that may not mean that it goes down to 20, but to correct a move that took that much time, you would think is going to last more than 6 months. You'd have to think it would last at least a few years. So it may not continue to be punished at the rate that it has been to this point, but it may head sideways for a substantial period of time. So obviously, we're pretty well invested in whether this 5-wave move has completed. So let's go ahead and zoom in, take a closer look. This is just taking a look at wave 5 here within this larger move. And this shows that labeling. It shows the pretty clear, it's fairly obvious, 1, 2, 3, 4, 5. It all counts out quite well. Last time we took a look at this, I indicated a move below 240 would be a bearish indication and would tell you that a larger pullback has begun. That's exactly what happened. It moved below 240 and now is trading around 140. So that is really broken down pretty quickly. And you can see again that yellow support area. We're just right at the lower end of that. So needs to turn up in this area or it's going to look like a pretty substantial high is in place, one that would portend a much larger pullback over the course of the next several months to years. So let's go ahead and zoom in now a little bit further. Let's see. Okay, so basically this chart here is taking a look at that pullback. Now, as is the pullback off of the 2021 high, it's a 3-wave move so far. If it were able to stabilize at this support area that it's testing now and get back above 235, it's a bullish event. Suddenly this pullback here is left as a 3-wave move. Support would have been found. All of those would be bullish things if that were to happen. Obviously, that would look like a buying opportunity. That level is not very close, but it's the hard line in the sand that can be used and should be used if Nvidia can turn up off of this support level. Now let's go ahead and zoom in. This takes a closer look at that pullback off of the 2021 high, and the way I'm labeling it looks like an ABC for wave A, a B wave recovery, and then whatever else is going on to the downside here. Pretty hard to determine exactly how to label this C wave, but again, it's at major support. It needs to turn higher. 235 is pretty far away. Ideally, what we would see is support off of that level, a larger bounce, and some trendy 5-wave upside action that we can bite into. Obviously, we're not seeing that yet, seeing as how Nvidia set a new low for this pullback today after having a pretty rough week. So it's not there yet, but I think it's not a buying opportunity until it finds support at this area and gives us some trendy upside movement, with the long game being looking for a move above 235 to solidify the larger bullish case. But as is, I think you have to be bearish on this guy until it proves that a low is in. And if it doesn't do it, if it's unable to find support here, it means this large 5-wave advance is over. And this is kind of what I was precluding to before. This yellow area here represents a Fibonacci retracement of this entire 5-wave advance here. So you may not see a ton of further downside. It goes down to about 110 or so. So there would be additional weakness, but more than anything, we would have to think that it would take a very long time for this entire 5-wave move to be corrected. So if that happens, if price continues down on Nvidia, looks bearish, I wouldn't touch it for quite a long time because we'd have to expect a much larger correction. So there is that one. Moving on now to PDBC, the Invesco Optimum Yield Diversified Commodity Strategy ETF. Lots of words, basically a commodity ETF managed by Invesco. We've looked at this one before, and I think our account has held up pretty strongly here as well. From the start for the first several years of this guy, just a lot of back and forth counter trend price movement. In 2020, that all changed, gave us a very nice 1, 2, 3, 4, 5 potentially complete 5-wave move off of that 2020 low. Now, if it did complete, it would point down to this yellow price area here, basically 1250 to about 1550 or so, maybe a little higher on 1575. Bottom line, we would be looking for a correction of basically, what do we got? Like a 2.5 year up leg. So you'd be looking at something maybe a year, maybe a little bit longer to correct this. Now, if it moves below 16 at any point in time, that would be a pretty clear indication that this 5-wave move is completed and that we are getting that counter trend pullback. So that's what we're looking at there. Let's go ahead and zoom in, look at a little bit more of the finer details. This looks at that 5-wave move broken down, and this is the labeling we've used before: 1, 2, 3, 4, and then you have this 5th wave, 1, 2, and then a 3rd and a triangle 4th wave and a 5th wave up. Obviously, it's still decently close to its high, so there's no guarantee that this is the correct labeling, but again, if it moves below 16, this will fit as the correct labeling and portend a larger pullback. What I was able to do was find one alternative way to label this, something to keep in mind, just to show you that it's not a guarantee that this 5-wave move is over. Maybe it's in an extended 3rd wave advance, something like 1, 2, and then all of this a larger 3rd wave, just as a subdividing 1, 2, 3, 4. That's a possibility. So I'm not saying that this guy is bearish right away, but a move below 16 would again look like the 5-wave move is completed and a much larger correction has begun. Now, if we zoom in and take a look at this price action here off of the 2022 high, what we see is a down leg that looks like a 5-wave move, looks like a trendy 5-wave move. So regardless of what's going on any larger time frame, we got to think a larger pullback is coming off of June's high. So it could be close to this, close to a low to this initial down leg. Whether it's a first wave or an A wave, whatever it is, we would expect a larger recovery and then another down leg. Regardless of what's going on any larger time frame, we would expect it to stay below 1975 while it's doing that during this recovery phase, and then give us another down leg. We'll see how that fits in the larger scale of things here. My expectation is that it's probably the end of this 5-wave move, but as long as it's able to stay above 16 and not get too big to the downside, the potential will be there that this entire up leg is not yet over. I think it is. I think in the near term, you have to expect a larger pullback. So I think if you own it, that would be something you'd want to consider maybe stepping aside after you get a larger recovery following June's weakness or something like that. But I think you have to be careful here because it does look like a larger 5-wave move could be complete and the near-term price action points to a larger pullback. So I hope that is helpful, Trey. Have a wonderful long holiday weekend. For everybody else, come visit us at TrendLizard.com. This is the type of stuff we do on more than 70 different instruments, whether it be ETFs, crypto, individual stocks, pretty much every corner of the market we look at with this stuff, and it works. So come visit us, TrendLizard.com. Have a great weekend.